Hello, good morning and welcome to this day of business. It's Business 360 and my name is Blyden Ukem. In today's Business 360, we'll look at the outlines in the world of business. We'll get to talk about what is happening within the forex market amid OPEC cuts in production output and how it's affecting the market so far from yesterday and today. We'll look at the US 30 stock market, the responses of the US market. We'll also get to talk about an entertainment point of view, a major of WWE, the World Wrestling Entertainment, and the Ultimate Fighting Championship UFC, to bring out a new company. And we begin from there. World Wrestling Entertainment, WWE, and Ultimate Fighting Championship, UFC, have announced they will merge to create a $21.4 billion sports entertainment giant. A new publicly traded company will house UFC and WWE brands, with Endeavor Group Holdings Incorporated, UFC's owners, taking a 51% controlling interest in the new company. Existing WWE shareholders will get a 49% stake. The deal unites two of the biggest names in wrestling and entertainment and caps a month-long sale process for WWE, overseen by its co-founder and executive chairman Vince McMahon, who returned to the company's board in January. McMahon will retain his role in the new company, which does not yet have a name. The companies put the enterprise value of UFC at $12.1 billion and WWE's value at $9.3 billion. It would be fascinating and thrilling to see the biggest companies in the wrestling and fighting world merging to create a new birth. Let's look at Chinese yuan. China's yuan has replaced the US dollar as the most traded currency in Russia, a year after the invasion of Ukraine led to a slew of Western sanctions against Moscow. The yuan surpassed the dollar in monthly trading volume in February for the first time, and the difference became more pronounced in March, according to data and daily transaction reports from the Moscow exchange. Before the invasion, the yuan's trading volume on the Russian market was negligible. The switch came after additional sanctions this year affected the few banks in Russia that retained the ability to make cross-border transfers in dollars and other currencies of countries branded unfriendly by the Kremlin. To the Nigerian business outlook now. The Federal Competition and Consumer Protection Commission, FCCPC, has approved 173 digital lending applications to operate in the country. Of the 173, 119 have full approvals and 54 have conditional approvals. After loan apps started harassing Nigerians, the FCCPC began a registration drive to protect citizens from the atrocities of these apps. It released a limited interim regulatory and registration framework and guidelines for digital lending 2022 to regulate the digital lending space and make registration and approval a prerequisite for companies seeking to operate in the space. After shifting its deadline multiple times, it finally adopted March 27, 2023 as the close of registration. Companies without approval will not be able to operate in the space. Looking at Nigeria's revenue in crude oil. Nigeria's revenue from crude oil export increased by 337 billion naira in March, hitting 1.8 trillion naira according to data from Refinitiv Eikon. Nigeria attained its crude oil production target of 1.6 million barrels per day in March, from 1.3 million barrels per day recorded in February. Seems like good news from a Nigerian point of view. Output from January was 1.25 million barrels per day, while that of February was 1.3 million barrels per day. Nigeria's output increase has in turn contributed significantly to the 28.9 million barrels per day of crude by the Organization of Petroleum Exporting Countries for the month of March. Looking at trades in the country and the debacle between the International Association. The total amount of foreign airlines trap funds in Nigeria has risen to $802 million, according to the latest figure by the International Air Transport Association, IATA, the Switzerland-based trade association of world airlines. IATA has warned the Nigerian government that the situation could hamper air connectivity, economic growth, and the development of the country's aviation sector. IATA chairperson designate and Rwanda Chief Executive Officer Von Makolo had listed Nigeria as a country with the highest block funds in Africa and the world. According to her, the total amount of block funds in Africa is $1.6 billion, out of which Nigeria has $802 million. She listed Algeria as a country with the least blocked funds in Africa. It would be a good time to move to global economy to see what the index and indices are, according to economic calendar and data expected to be released today, Tuesday, April 4, 2023. Let's go to the calendar. The economic calendar this morning, as at early hours of the morning, 12 a.m., was that of South Korea. Inflation rate year on year, according to March report, indicated that inflation dropped to 4.2% from 4.8% previously in February. The forecast was at 4.6%, but it had a better outcome. Also looking at the key index, by 5:30 a.m., as highlighted with red, is the Australian interest rate decision. The Reserve Bank of Australia came out with a decision to keep it at par at 3.6. Previously, it was at 3.6%. No changes, indicating stability in inflation rates in the country. The forecast was at 3.6%. Let's look at the 7 a.m. period. The economic data that will be out in the afternoon. Let's move to the afternoon period then. As at 12 p.m. is expected of an outcome of the foreign exchange reserve in Mexico. We'll get to find out what the details would be. It stood at $2 trillion previously in Mexico. By 3 p.m., as highlighted, expectations from the U.S. would be the JOLTS job opportunities and openings for February. Previously, the job openings stood at 10.84 million. Well, we'll get to find out by 3 p.m. from investors' point of view and economists what the outcome would be for jobs opening in the U.S. So looking at the U.S., inflation falling fast enough? That's the question. Is it falling fast enough? We'll get to hear from Blue Foot Map. But moves in the major inflation indexes released in February and March convincingly demonstrate that inflation is on a downward path. We know that these indices in the U.S. affects global economy. Goods inflation has receded rapidly. Energy inflation has moderated considerably. Only shelter costs remain stubbornly high. Let's get to hear more from Blue Foot Map.
The U.S. inflation picture is getting just a little better every month. Goods inflation has receded rapidly. Energy inflation has moderated considerably. Service inflation, driven by the critical shelter component, is still a challenge, but there's no question that rising interest rates have hit the housing market. All in all, inflation may not be receding fast enough for some analysts and policymakers, but inflation is clearly on a downward path. Importantly, the core inflation rate, excluding food and energy, as measured by the Personal Consumption Expenditure Deflator, is at 4.6%, which is now below the prevailing range for the federal funds rate of 4.75% to 5%. This is one measure that monetary policy has moved into restrictive territory. Another measure, an inverted yield curve with short-term rates higher than bond yields, has been signaling a restrictive policy since the middle of last year. And we will not know for months just how much the recent banking system impacted credit conditions. All of these factors will go into the Fed's future decisions on whether policy is sufficiently restrictive.
That's an outlook from Blue Foot Map, chief economist of the CME Group. Whatever happens in the biggest economy in the world, the US, gets to affect the rest of the world. Still talking about the US, let's look at factory activities in the US as it falls for a fifth month. The ISM manufacturing PMI fell to 46.3 in March, the lowest since May 2020 and below market expectations of 47.5, suggesting that rising interest rates and growing recession fears are starting to impact the sector. Companies continue to slow outputs to better match the demand for the first half of 2023 and prepare for the growth in the late summer and early fall period. It would be a good time to look at the charts indicating the United States Purchasing Managers Index, PMI, the charts. The charts in the US have shown some complications, moving upward and downward, but it's been pretty downward in this one. From April 2022 went up to above 54, close to 56 index point. July 2022 had dropped to slightly above 52 index points. As at October 2022, it was still dropping close to 50 index points. By January 2022, it had gone below the 48 mark and now just slightly above 46 point mark. Let's move to the Oceania region, Australia. Australia pauses rate hikes. The Reserve Bank of Australia maintained the cash rate at 3.6% as we saw on the calendar during its April 2023 meeting, marking the first half and the first halt in the central bank's hiking cycle since it started raising rates in April 2022. According to Governor Philip Lowe, the decision to hold interest rates steady this month provides the board with more time to assess the state of the economy and the outlook in an environment of uncertainty. Well, there's uncertainty all over the world, according to the words of the bank president. Let's move to Africa. Egypt is the point of call. Egypt private sector shrinks for 28th month. The S&P Global Egypt PMI ticked down to 46.7 in March 2023 from 46.9 in the previous month, stretching the current sequence of deterioration in more than 2 years. New orders further deteriorated as steep inflationary pressure and drop in client demand negatively influenced the non-oil businesses in Egypt. Let's look at the charts indicating Egypt's non-oil private sector, the PMI, the Purchasers Managers Index. Egypt's PMI this morning has shown a bit upward movement and downward movement. April 2022, it was close to 47 point mark, but further went down as of July 2022 to below 45.5 and slightly above 45 index point. At October 2022, it went higher to 47, the peak of it last year, but it's been a slowdown and currently slightly above 45.5 index level in Egypt, indicating that fluctuation in the economy and manufacturing, the non-oil sector in Egypt. Would be a good time to look at the commodities market and the intricacies of the commodities. A month of downward drifts in the dollar, increasingly moderate inflation moves and signals from the Fed, the Federal Reserve, that a current rate hike cycle may be winding up could form a major updraft for the precious metal. Just how far this, or could this fortuitous combination drive gold? That's a big question. How far can gold go? The price have been going upward and upward. Let's have insight from Bob Icino of Trading Partners. Bob.
The dollar is now down in aggregate 4 of the last 5 weeks. U.S. GDP numbers last week were revised down again, and the rise in consumer prices. The dollar is now down in aggregate 4 of the last 5 weeks. U.S. GDP numbers last week were revised down again, and the rise in consumer prices, as tracked by the PCE deflator, is starting to slow. All of this may continue to be a tailwind for gold. Gold was up over 8.5% for March, the best month since July of 2020. So far, gold is up over 9.25% for the year. While gold is considered by many to be an inflation hedge, the falling inflation data that we've seen in recent months has yet to push gold significantly lower, partially because interest rates are also falling. Gold typically has an inverse relationship with rates and tends to rally when the Fed is cutting rates, which the market currently has priced in at a reasonably high probability starting this June. All of that can change rapidly, but at this point, gold is still on the front foot.
Let's get to the market then to find out the current price of gold, silver, steel, copper, and other metals, the metal markets. The metal market this morning has shown some positivity, but gold is slightly downward after approaching the $2,000 mark, slightly downward this morning by 3.25 points, a negative 0.16% decline, but hugely on the overall, it's gained 0.42% this week. On a monthly basis, gold has been going upward. For silver, current price $24 per ounce, gaining just slightly in the morning market. Copper, the same story, but steel is downward by 90 points, 4,018 Chinese yuan per ton for steel. Let's look at the outlook in the market regarding oil, as oil spikes on surprise OPEC Plus cuts. Orlando senior market analyst Craig Elam discusses the moves in WTI crude after OPEC Plus surprise markets by cutting outputs by more than 1 million barrels per day. Let's have Orlando senior market analyst Craig Elam on this one.
Barrels a day. Now this comes on top of previous production cuts, most notably the 2 million barrel a day production cut that was announced towards the back end of last year, and really emphasizes that it will not stand by regardless of how unclear the outlook is for the global economy, and see lower oil prices amidst a potential downside for demand and obviously a downside for the global economy as well. What's most interesting about this is the timing really of the announcement. The reason why I think markets were not expecting an output cut to be announced this month is quite simply the fact that the outlook is so unclear. We still don't know what the full ramifications of the mini banking crisis are going to be over the course of the rest of the year, but it seems like OPEC Plus has decided to take a more defensive approach on this.
That is the perspective from Craig Elam of Orlando. Let's move to the market. The energy market to see the current prices of crude oil, the US crude WTI, as well as the Brent. The crude oil market this morning has been pretty upward amid all the concerns regarding OPEC production output cuts. Crude oil WTI US crude, current price $80 per barrel, upward by 0.414 points. For Brent, which is Nigeria's price benchmark, is $85 per barrel. Natural gas is slightly upward, gasoline slightly upward, heating oil also slightly upward, and that's the outlook from the energy market. Let's see the agricultural market too, if there's a ripple effect on this one. The energy market begins with soybeans dropping by 1 point in the morning market. On a weekly basis, soybeans has gained 3.78% appreciation. Current price $1,520 per bushel. For wheat, it's gained 7.24 points this morning. Current price $700 per bushel. While lumber is slightly downward, Malaysian ringgit per ton of palm oil, current price is 3,955 Malaysian ringgit per ton for palm oil, upward by 71 points, a 1.83% appreciation this morning. It would be a good time to look at the foreign exchange market then. We'll have to talk to Todd Colvin. The British pound started Monday lower, but rallied above 1.24 mark on US dollar weakness. Let's hear from Todd regarding this.
Weaker than pound opens up the week moving lower, dipping its toe briefly below 123 before seeing a rally back above to north of 124. A lot of that rally came on the weakness of data here. The ISM number came in weaker than expected. Likewise, the manufacturing component came in really weak, its lowest since COVID, helping to push the dollar lower, which helps support the pound. Likewise, At the upcoming May Bank of England meeting, expectations hovering between 70 and 75% that they will raise rates another 25 basis points, yet some of the speakers over there are talking more about letting the tightenings do their job. So it'll be interesting to see how that pans out over the next month and a half or so. How does this all affect volatility? Well, check out that CVOL index over at cmegroup.com, and you'll notice that volatility, after seeing a spike in mid-March as...
Well, that's the outlook from Todd regarding the market. Let's see the value of the pound in the forex market this morning. The euro against the US dollar, then the pound against the US dollar then. The morning market has been some positivity for the euro. In recent times, the struggle has been within the 1.07 mark, but it's gone past the 1.07 mark to the 1.09 mark, upward by 0.002 point this morning. The pound has increased to 1.24 mark beyond the 1.23 mark, and it's gaining against the US dollar. The US dollar is weak in recent times, in particular this week it's been weak. Let's look at Naira against the US dollar in the market, as well as Naira against the majors. Current price 459 Naira equaling 1 US dollar at the international and exchange window. For euro against Naira, its current price is 499.92 Naira equaling 1 euro. The euro gaining 1.5 points against the Naira. The pound's also gaining 2.16 points against the Naira, 569.2 Naira equaling 1 pound. Let's go to the parallel market to see what the black market is saying regarding these exchanges. At buying rates, current price is 745 Naira equaling $1, and selling rate is 740 Naira to $1. Also for pounds to Naira, buying rate is 925 Naira to 1 pound, and 912 Naira to 1 pound are the selling rates. The euro to Naira, it's 802 Naira to 1 euro at buying rate, and 876 Naira to 1 euro at selling rate. Let's see the cryptocurrency market, away from the fiat, now to the digital currency. It's been battling up and down for Bitcoin, but Bitcoin is up 28,000 US dollar for 1 Bitcoin, upward by 503 points, a 1.83% appreciation. Ether also is upward this morning. Binance, Cardano, Solana, Ripple's all upward this morning. Let's conclude with the stock market as we get to see what happened within the Nigerian stock market, but a quick look at the US stock futures. The US stock futures were little changed today after the major averages ended mixed during Monday's regular session, as investors weighed a surprise production cut from OPEC Plus and its impact on inflation and Federal Reserve monetary policy. In regular trading on Monday, the Dow and SP 500 climbed 0.98% and 0.37% respectively, helped by gains in energy stocks amid a jump in oil prices. Meanwhile, the Nasdaq Composite lost 0.27%, weighed down by technology and its shares, as investors were worried that the Fed may need to tighten policy further to keep inflation under control. In corporate news, Tesla dropped 6.12% after the company missed first quarter deliveries estimates. Let's quickly move to the Nigerian stock market as a close of yesterday and see what the conclusions were. The stock market, from Nigeria's perspective, capitalization depreciated by 0.08% on Monday, representing a loss of 26.14. The All-Share Index also closed downward at 54,184.34 points. Well, we'll get to talk about the top gainers that happened in this market at yesterday's closure. The top gainers. Lasaco topped the table with a positive 10%, a 1.21 points appreciation. And the bottom losers, SCOA tops the losers table with a negative 10% decline. Top volume then. The top volume, Fidelity Bank led the day's trading with 79.73 million shares, valued at 426.8 million naira. That's it on Business 360 today. My name is Blyden Kim. Thank you for watching.